I need y'all to hold wrong side. I need y'all to hold my hand or me hold your hand when I say this. I recorded a 36-minute fucking video. Okay? 36 minutes. For the shit to like my mouse stopped moving and I couldn't do nothing. And it just cut that shit off. So I'm gonna go through this again and I'm gonna try for it not to be 36 minutes. I'm gonna be proud of myself if I do that though. I'm willing to do this because I know that this type of stuff helps people. But leave a little comment below or something, tell me what you think. What we're looking at here is before I started, let me hit Control Z on this. Won't go too far back. Anyway, I'm showing you this because I had a bunch of drawings on my chart and I deleted them so we can get back to it. And I said that I'm pretty sure that I can get this exact same drawing that you see right here. It will minus these little yellow and blue lines, this box right here and all of this stuff. This is the daily time frame. We're gonna go through this from the 12-month chart. I did a whole entire freaking walkthrough, bro, of how I follow everything. And so I'm gonna do it again. Fugged. I thought that these videos only went for 20 minutes too. So I also did a whole explanation of bullish and bearish candles, bro. Like that shit just irritated the fuck out of me. I ain't gonna lie. But look, let me pause this. I'm pissed. All right, I'm not that pissed for real, but still, it's irritating as fuck. So I'm gonna do a bearish candle example, and I'll do a bullish candle example, and then from there, we'll just go into looking at what I was looking at earlier. So what I did was I did something like this. I basically showed the high, the low on a bearish candle, the open, the close. I feel like I did this video before. 36 minutes. But a bearish candle is a bearish candle because they say bearish because when a bear attacks something, it pushes down, and a bearish candle means that the open was right here, the close was right here. Meaning, if this is a 1-day candle, so this is a daily candle, that means that at whatever time the market opened on that day, excuse me, sorry, the market pushed down to this close. How did it get up here to the high? You can't tell just by looking at the candle. How did it get down here to the low? You can't tell just by looking at the candle. You have to go within that candle and look at it on a lower time frame to see how the candle was formed. And so inside of a daily candle, you have what, 12, 24 1-hour candles, and you have like 60 5-minute candles. Is that right? Let's see something. 1440 divided by 5. It's 288 5-minute candles. I don't know where the hell I was getting my math from. But anyway, if the market opens right here, it could have pushed up to here and then pushed down and then came up and pushed down and started a whole little downtrend and then came all the way down to this low and then came all the way. Like, I don't know why the market will be moving this insane, but it does this sometimes, right? And then it just made a low and then closed right here. This is one way that this 1-day candle could have formed. It's a good downtrend. All of a sudden, the market decides. In an instance like this, I would want to wait for price to come back up here. Now, the problem is price made a low and then it made a lower high. It should not have made a lower high if it wanted to continue bearish, because from this lower high, you want to create a lower low, but it failed and it turned around. That doesn't mean that we're going to 100% break this high, but it does mean there's a chance that we could. However, in this example, for simplicity, let's say that we do, and now we're on this quick little uptrend, and then we make these equal lows, and then price breaks, and now we're bearish from here to here. That's one way that this candle could have formed. The more simple way that this candle could have formed is price opened, pushed up to the high, came all the way down here to the low, opened, came up to the high, came down all the way down to the low, and then came up here and closed. That's one way it could have formed. Or it could have opened here, dropped down to this close area first, right? And then pulled back and started coming up, and then it broke this and came up and came down to the low, and then it came all the way up to here, and then over time throughout the day we close right there. This is a whole entirely different way that the market formed, and then vice versa for for bullish candles, right? I'm just gonna change the color of this candle and make it a bullish candle. I'm not really gonna do the whole thing over. And now for this, in this instance, a bullish candle opened right here, closed right here, so it went up over time, and then the low is here, the close is here. We understand it could have formed any kind of way it wanted to, but we understand the main 2 points are the open and the close. That's what determines structure of a market and everything. So now let's go back to the 12-month chart. The first thing that I look at, if I came to a chart and if this was a daily and the only thing that was on the chart was this, I'm looking at the opens, the highs, the lows, and the closes of these candles. I don't actually do this, but this is what I'm saying, that, in order to follow it, you can do this. So I put this box is showing the range of this bullish candle, and then we can see the next candle closed above. The close is up here. It did not close inside this range of this candle. It did not close below. It closed above because the close of this candle is above this line. I'm not going to use the box. I'm going to use these lines. So we clearly have a closure above, and it closed up here. Now from this high, did we close above this candle on the next one? Yes, we did. Did we close above this candle on the next one? Yes, we did. Now you will get wicks, right? And this is a low on a lower time frame, but it's not a low on the time frame that I care about. What makes a low would be if there was a candle closure below here, but there's no candle closure below this low. And so we end up not closing below this range, so we can move this line to up here to this high. Did we close above this candle? Yes, we did. This candle here is considered to be, it's not 100% an inside candle because the wick of this candle did go outside of this candle, but it still is mostly within the body of this candle until we get here. And then we got to say, did we close above the high of this candle before the low was closed above? No, we did not. We closed below the bottom of this candle first, meaning now the pullback has started. This is one smooth impulse from this low up to this high. Let me turn this off. From this low up to this high is one smooth impulse. And I'm going to color that with green and call it buys. And then from here, this bearish candle came down and closed below here. And it actually started from this high. So now I'm going to color this as sells. Not that we should sell right here, but it's just telling me that mostly selling happened here. And that's how we made this bearish candle closing below this bullish one. My candles are different colors too. Typically it's red and green. I changed my bullish candles to gray, the black ones to bearish for black. And the reason why is it kind of helps take out some of the psychology. Green candles will make you stay in a bad trade because green signals good. And you'll think you're good even though you're not. And then red signals bad. So if you're in a winning trade short, a lot of times you'd want to cut your wins too quickly because red it heightens your anxiety. I don't know if they colored these candles on the charts on purpose this way, but that's just what it is, right? And so on the high of this candle, which is the next range that we care about, because price could have came up to here and dropped, and it kind of did something like that, but it closed above this candle before this big ass wick right here. All right, so now I'm looking at the low of this candle and the high of this candle. Which one do we close above? The high. Get rid of this low. That means now what you could have done is bought on this candle right here with a stop loss below this wick, or below this is the low, and at the close this wick was here, so this would be the proper entry. My risk to reward typically is 1 to 3. It hasn't even gotten there yet, so this would be a trade that somebody's in for what, decades at this point. The entry 1 2 3, well, entry 1 2 3 4 5 6 years in this trade, and it's paying off pretty damn good. You would only trade this like that if you have a really big account. And so banks are trading like that. Now you look at this. Did we close below this candle? No. Did we close above this candle? Yes. Get rid of this one. Did we close below this candle? No. Did we close above this candle? Yes. Get rid of this one. Did we close above this candle? Yes. Did we close below it? No. Did we close below it? No. Did we close above it? We don't know yet because it's still forming, which means there's another bullish impulse from this low all the way up to this high. But because this low right here reached below this one, I have to update it to this low. And this is the new bullish impulse, which means there's a majority of buying happening in here. You're making money if you're buying in here. So we can delete all of what happened before that point. This is a break of structure. And we're gonna make that a let's say monthly. And I'm calling this a break of structure because where price finally closes below the bullish candle, and then we have that closure back above here. The fact that we have a closure below and then a closure back above, this now becomes what we call a swing point or a low or whatever. And the point that was up here is also a swing point on this time frame because it had a closure below after it closed above. We close above and then we close below. That's a swing. I don't know why they call it a swing, but they do. We close below, we closed above. This is now a swing. So the next time we close below a bearish candle on this chart, it will become a new swing point. And so once we break a swing point, that is called a break of structure, which is the reason why this becomes a swing point after we close below it. If we break above that candle, the market is about to close, it will become a swing point, right? So now this big bullish impulse, we have to investigate inside of this impulse what happened. From the 12-month chart, typically I would go down to the 3-month. I'm going to skip all of that and bring us to more recent price action, knowing that we have a break of structure right here. Price literally has only done this: push up to this high, pull back, push up to this high. And this right here is a break of structure. When price breaks structure, that doesn't mean you just instantly jump in a buy. The reason why we would have entered this buy is because we closed above this bearish candle. It just so happened to also be the candle that broke structure too. You know what I'm saying? So we have a break of structure and a break or a shift in structure. When price shifts, the momentum is what happened right here. The momentum, this was buys. The momentum got shifted and we came down. And then we shifted the momentum back bullish and it's buy. You get what I'm saying? I hope you get what I'm saying. So we're going to skip this and now we're going to go down to the monthly. I'm going to do the same thing I did in the last video. I didn't want to do this in the last video, but I did it. We're 12 minutes in. I ain't trying to take 24 minutes to do this shit. Let's go. Look, so we close above this candle. We close above this candle. We closed above this one. We closed below this candle. We didn't close, we opened below. But this is a bullish candle that started from here. So the only way possible to open below here is if there was some bearish momentum that pushed below here. And so now I know that this impulse started from here and pushed all the way up to this high. Now, this is going to be the high that if we can close above it like we did in the future, that's going to become a break of structure. And so if we close above this candle, which technically this should be a bearish candle, technically we opened at the low and closed at the high, but this is kind of confusing. It's a little bit advanced. But we open below here, which in my mind tells me, like I said, there's some type of momentum that pushed price down to cause it to open below here, which means this is now a swing point. This up here is a swing point. Now I'm gonna put these little yellow things on here every time I say a swing point. That's a swing point. That's a swing point. We never closed with a body closure below here. We reached below and we pushed right back up. But on top of that, we closed back above this candle. Default. Where is it? Default 2. Cool. We closed above here. This could have been a long entry with a buy. If you put your stop loss below here, that's not wrong, but you get taken out. And then once you get taken out, if that candle closes, back above here again, you can kind of just jump right back in on the next candle now with a stop loss below here. But that's kind of messy. That will get you fucked up in the long term. So I'm going to delete all of these. Put our little impulse back. And now this is where the momentum shifted. And so this is where I can change this to majority selling happened in there. And then from here, price started to push up again. It pushed up pretty damn high too. It pushed up all the way to here. And I'll show you how I found that so quickly. But it's just like my eye is trained to do the same stuff that I'm telling you that I do, that I do. And so today is not the 27th, 227, 26. It's because I'm on the monthly chart. It's over on the 27th. Got you. The next day. Okay, cool. Um, this candle got closed above. Did we close below this candle? No, we did not. And so we close above. Did we close below this candle? No, we did not, but we closed above. Did we close below? No, but we closed above. And that's literally what you got to keep asking yourself is, are we progressing forward with bullish momentum, or is it introducing bearish momentum? Did we close below this candle? No. Did we close below this candle? No. Did we close above it? Yes. Did we close above this candle? No, we opened above it. If we get an open above, that means this bullish candle actually closed at the open. You know what I'm saying? Like, majority of these candles open at the close of the previous candle. You know what I'm saying? Like the close of this bullish candle is the open of the bearish candle. The close of this bearish candle is just about the open of the next candle. The close of this one is the open of the next one. The close of this one should have been the open of the next one. The close of this one is the open of the next one. The close of this one is the damn near the open of the next one. And most of the time, it's right there on each other. It's just there's a lot of volume in this German 40 is what we're looking at. It's called GER40 or DAX 40. It's the German, it's a German index, but we can still trade it. And then you say, did we close this candle right here opened above? Like I said, so it technically means this bullish candle pushed up to here. So we're still operating with this bullish candle. And did we close below it? No, we did not. But did we close above it? Yes, we did with this bullish candle right here. So now I'm on this candle. Did we close below it? No. But did we close above it? Yes. Did we close below this candle? Yes. Did we close below this candle before we closed above it? Yes. So what is this? This right here is our swing point. And so that means to me, this right here is a swing high. Now we are following the bearish candle. Did we close below it? No. Did we close above it? Yes. So what does that mean? This is now our swing point down here on this low. The reason why it's this low and not this one up here, even though this candle did not close below, is because once price closes above the candle that is responsible for creating the swing point, and the candle that's responsible in this instance, in a bullish instance, for creating the swing point, is the first bearish candle that breaks the bullish candle cycle and shows us that there's a majority sellers in the market at this point. Booger boy, no, I'm joking. But look, so price does, if we go down to the daily, we can see the daily literally went bearish. Like, this is bullish, bullish, bullish. The daily literally broke this low, went bearish, pulled back, and continued bearish. So you can literally see where the trends are without actually changing the time frame, and that's called fractals, but we'll go over that at a whole nother time. So now we have this new bullish impulse, and it was a break of structure. Like, price broke above this little yellow dot because that was the point. It was a break of structure there. Price pushed up. It pulled back. It pushed up and closed above that high with this candle. This is going to be buys. And now we need to look at the high of this bearish candle and say, did we close above it? The answer is yes. But the break of structure is above this candle. This one has the highest high before this low was created. And then prices closed above this bearish candle, which was the parent candle. Now we had to see, did we close below this candle? Oops. Did we close above this candle? No. Did we close above it? Yes. Did we close below this candle? No. Did we close above it first? Yes. Did the next candle close below or above? It did not close above or below. And we stay in this range until price is able to close below or above it. We don't give a damn if it closes above or below. It's only showing us what direction we need to be trading in, or what kind of momentum is in the market. On a high time frame like this, it's cool for us to say the direction that we're trading in because it takes a long time for these candles to print. But in the on the lower time frames, it's not so much about what direction the market is moving in, and it's more so about the momentum. If the momentum does not match the overall box that we're trading in, because in this box I'm looking for buys. You see, price delivered to the high before it came down here to this low. So at this point, we know there's a new swing point, swing low, there's a swing high, because this high is higher than this one, and it's where a bearish candle was able to close below the last bullish candle that was able to close above a bullish candle. Let that sink in. That shit is confusing. I've been trying to figure out a way to say that properly for a few years now. But then did we close? Now that we're looking at bearish candles, did we close above this candle? No. But did we close below it? Yes. Did we close above this candle? No. But did we close below it? Yes. Did we close above this candle? Yes. What does that tell me? Because now we're in this overall bullish push. Our pullback started. Once we get a bullish candle starting this again, our pullback is over. I don't care what happened right here. You see it failed, but it doesn't matter because we don't know that none of this shit is going to exist because I almost covered the screen like I almost put my hand over the screen to cover it like you could see what I'm covering. Dumbass. All right, bro. What the fuck? Bearish candle. This one. We don't know that any of this shit right here exists. We don't know what's going to happen. Price could have even started pushing up and then came all the way down, but we just don't know. So I just covered that up so you can see what I mean, right? And so this right here is your purchase buy, is your buy order. This is a 1-to-1. I wouldn't put my stop loss right here all the time. I would put it down here at the structure low, but now your next target is at this high. That's the next time that you know that's where the money is. Like, this is the reason why we go on the lower time frames and get involved in here so we can catch this candle up. There's signs on the lower time frame that it's going to start pushing up. A lot of times it's easier to wait for this break to then start buying, which you'll see in this example right here. I'm gonna keep going. I'm gonna show you what I meant. So now we get to highlight this all the way down to this low as sells, or like there's a majority selling in this little push right here. Then there's majority buying in this because we closed above a bearish candle. So we make this buys. And then let's keep following it. Did we close below this candle? No. Did we close above it? Yes. Did we close below this candle? Yes. Did we close above it? No. And this candle right here is the one that made a new swing point. This is now a swing point. Why? Why is this a swing point? I said it like 1, 2, 3, 4, 5 times now, because this bearish candle is responsible for a closure below a bullish candle that was responsible or that was able to close above its previous bullish candle. And so in this range, that's mostly buys. But now this pivot is telling me, or this swing point is telling me that price wants to go down. Now, did we close below this candle? No. But did we close above it? Yes. What does that tell me? In this instance, I can put a buy right here. I can putting a stop loss right here was not wrong, but now that prices came all the way down here, it shouldn't really go any lower. It made a new swing point right here. Why? Because we close below here. This is now a new swing point because this bullish candle closed above the last bearish candle that was able to close below the bearish candle before it. This is majority selling in here. Majority selling. And now this right here, closing above here, shows me that the buying is coming back in. The buying is starting. The buying is doing what it needs to do. And it becomes a new bullish impulse. So this is mostly buys. Oh, I did that wrong. Primarily buys in this range. Buys. You don't know that just yet though. You're following this right here because all of this shit right here, which I'm gonna say, all of this happened inside of this bullish impulse. So I keep saying I don't give a fuck about what happens inside of here. I only care about whether price takes out this low or this high. But you can follow the candles inside of this range to see what it's gonna do. And it gave you one entry that was fake, and it gave you a new good entry right there. My risk reward ratio is normally 1 to 3. It hit about 1 to 2 before it come back down. Let's go ahead and keep it going because I feel like we're doing way better than the last video. So now that we have this succession of bullish candles, it don't even have to be a bullish candle because this is a bearish candle, but it still closed above this candle. So somehow it jumped up and closed above this candle. So this one is the next candle that we need to pay attention to. And did we close above it? Yes, we did. Did we close above this one before the low? Yes, we did. Did we close above this candle with this one before the low? Yes, we did. Did we close above or below this candle first? We tried to push up and close above here. It got rejected and pushed down, and it made a new swing point because it shifted momentum back to the downside, which made this a swing point after it was able to close below this low, because this bearish candle is responsible for the closure below a bullish candle that was able to close above the previous bullish candle. I hope that's not confusing, and I'm gonna probably stop saying it because I feel like I'm confusing somebody. But I feel like you get the point at this point. I feel like you get the point at this point. Yeah, you get the point. And I feel like I'm being a little more thorough than before too. So now, did we close below this bearish candle? Yes, we did. Did we close below this bearish candle? Yes, we did. Did we close below or above this bullish candle? We closed above it. And what does that mean? This bearish candle was not able to be, this bullish candle was not able to close below this bearish candle. The momentum did shift bearish for this, the monthly, 3 months, but it wasn't able to hold on, and it shifted back bullish by closing above this bearish candle, making this a swing point. So this swing point here, we knew that we didn't know, but we could assume that it would based off of the fact that this big bullish candle closed above here. It's a lot of money in this candle. It's a monthly candle. And so we just keep following these bullish closures. Bullish closure. We did not close above this candle, but did we close below it? We did close below this candle with this big dark candle here. Then everything that happened inside of this candle doesn't really matter because it's overall a big bearish candle, and I need a bullish candle to close above it in order for me to start getting back in the buys. So what am I doing with this bearish candle? Cool. So you can still see all of what happened in there. But this is a bullish impulse. And now if we close below this swing point, this is a break of structure. And this big candle right here closed below breaking structure. And what does that mean for me? Because all of this is inside of this candle, that means the high is here. Price came all the way down to this low. And why do I say it came down to this low? Because we followed these bearish candle closures. This big black candle closed below this bullish one here. This bullish candle got a closure below with this one. I'm not bullish. This bearish candle got closed below by another bearish candle. So bearish candles are trying to close below bearish candles. Bullish candles are trying to close above bullish candles. And we finally get a closure above this bearish candle with a bullish one. What does that mean? We have swing points. This swing point got broken. When this bullish candle got closed below by this bearish candle, this became a swing point. This has majority sellers in it. And now we know that we're looking for primarily sells in this red box, which means we should be looking at the closures of these candles. This bearish candle got closed above by this bullish candle, doing what? Creating a swing point. Swing points are your targets. The next time price goes bearish, like shifts momentum back bearish, this is the target. This is the money. Sometimes you'll see me draw a little money sign because this is the draw on liquidity. This is where the bag is at. This is the end of the rainbow. This is the fucking pot of gold, right? So we close below this candle. Nope. Did we close above it? Yep, with this little closure, but big candle. Did we close below this or above it? We closed above this candle before we closed below it. Did we close below or above this candle first? We closed above this candle before we closed below it. Did we close above or below this candle? We closed below this candle before we closed above it. Doing what? Once the bullish momentum shifts into bearish momentum, the high becomes a swing point. And it happened inside of this zone. So you are to take a short right here with a stop loss. I mean, you don't have to put it all the way out here because you'll go to a lower time frame. There's a low in here somewhere. You can move this down, but the target is this low. And my risk to reward ratio I take is a 1 to 3. So my stop loss would have had to be like right here somewhere on a lower time frame. But the point is that is an entry on this time frame. Stop loss goes at the swing point. So the swing points tell you where your stop loss is supposed to go. A lot of times people say, I don't know where I put my stop. Your stop loss goes at swing points. Swing points. And so this is primarily bearish. This is a bearish range. And now we follow the bearish candles. Did we get a bearish closure below that? Yes, we did. Did we get a bearish closure below here? No, we did not. Did we get a bullish closure? Yes, we did. Does that mean the market is bullish? No, it does not. When does the market go bullish? It goes bullish after we take out the swing high. This is a swing high. I'm not saying that's where the money is. That's not where the money is right now. Right now, the money is down here until we close above here, right? And so price pulls back. It pushes, oops, I keep doing that. It closed above this candle with a really teeny tiny closure above, but we don't care. It is a closure above. And the reason why I use the closures of the candles and not the wicks, I don't give a damn about this wick being up here because it could have came down right after this wick. You know what I'm saying? Like these, all of these, well, this candle closed above, but this wick right here got a closure below on this candle. That's why I don't care about the wicks. The wicks don't tell me anything except where prices travel over any course of time. All right. And we're on the monthly, so we're going to the daily next. And then we close below here. What does this mean? We're already in a bearish push down. Prices just shifted back bearish, and that means this now is a swing point. This is a swing point, and it's a lower high because this high is lower than the previous one. Now, the job of a lower high is to go down and create a lower low. This is the low. Price should come down here and create a lower low. This is the gold. This is the pot of gold. This is the money. This is everything that you want to make. But instead of coming down here to this low, we get a new shift of bullish momentum to come back in and close above that candle, making what? Making a swing point. This is now a swing point, and it's also a higher low. This low is higher than this low. This is the last swing point. Highs and lows are swing points. This was a swing point that I never marked up. So we can delete this. And then from there, price starts to literally follow the bullish momentum on these candles, and then it breaks structure. Call that monthly. It literally broke structure, and that happened starting from the swing point, the swing low. And that swing low pushed all the way up to this high. And it was majority buyers in this area. This is not saying that, hey, we buy in this green box. We only buy in the green box if the market, if that green box was responsible for a break of structure. This would be primarily selling. And now you see, literally, if we pull this box forward, did this ever come down outside the low of this box? No, it did not. It stayed inside that box and created more structure. So now we close above this candle. Let me put that back on default too. Did we close above or below first? We closed above this candle first. Did we close above or below first? This candle here closed above before we were able to close below. Did we close above this candle or below this candle first? We closed below it first, which means what? We just created a new swing point. right? See what I'm saying? This would have been the swing point, but once price reaches above this without closing above it, and then we have this closure below, this gets updated to this high. You know what I'm saying? We tried to push up, it got rejected heavy. And so we stayed in the range of this bearish candle until this big candle here took that out. We can delete this. This is why that's the swing high. And now the bearish momentum is coming in and it ends right there. What does this mean, bro? I don't know how I feel like I'm frustrating myself because I know somebody is going to be confused. And this shit is not that confusing. Stop loss goes under the swing low, and the target is where? The swing high. Why did price come right here? It wasn't an accident. This wasn't a mistake. I don't do this shit for fun. I'm talking shit. So this is a retracement where there's majority sellers. And then the bullish intent or the bullish momentum starts again. So what does that mean? You take a buy. What is, like I did this already. I just deleted it. But yeah, so you can literally start following all of these candles and then just keep following them to see where swing points are created. This is a new swing point. Why is this a swing point? I know somebody is paying attention and they know exactly why this is a swing point. This bullish candle that has the high, this is the highest high of this whole entire move up. It literally started at this line and stopped at this line. And then this candle has that high on it and we close below it. So that is what a swing point. And the momentum is now bearish. That doesn't mean the market is bearish. It means the momentum is bearish. We want to wait for the momentum to match the structure. All right. So the structure is bullish. The momentum right here is bearish. And we want to wait for the momentum to match the structure again. And so for right here, this is where the momentum went back into the bullish direction. We don't know that it's going to break structure just yet. We anticipate and expect for it to break structure. And that's exactly what it did. And that bitch has been to the moon ever since. It's literally not had a pullback since then. Bullish candle closure, bullish candle closure, bullish candle closure, bullish candle closure. No low, the wick below the lows. It came below the lows, but this is why we wait on candle closures. Some people, if you see a closure below here, and not even closure, they see this candle over time was black and then it came back up and it turned gray. Like as these candles are printing, they change color back and forth. So that's why you gotta wait on a close. And while this was a bearish candle and it was down here, somebody probably hit sell because I don't know why. I don't know why they would do that, but thinking that it would continue down, and it just keeps on continuing up and up and up. Jesus Christ, it just keeps going up and up and up and up. And right now, this is the monthly. We're waiting on this monthly candle to close to see if it's gonna be one of those candles that continues pushing up for us. And so this low literally is a swing point, and right now we know this is a confirmed high. We can get rid of that little box. And this bullish candle closing above this bearish one created a swing point. It took me almost 40 minutes to say this, but please watch the video. Like, I know some people have questions and stuff like that. There's nothing wrong with having questions, but just watch this whole video. And if you do this on all the time frames, bro, when I tell you it's literally the same shit on repeat over and over and over again, if you do this on every time frame, you'll start to see how they like form into each other. They start doing that like weird little Jabberwocky shit and like making these patterns. So now on the monthly, all I can do is go down to a lower time frame. I don't use the weekly from the monthly because the monthly is like this, the weekly is like this. When you put them together, it's too big, it can't fit. But the daily would be like this would be the monthly, this would be the daily. They slide right into each other. And then this would be the daily, this would be the 1 hour, they slide right into each other. And then this would be the weekly, this would be the 4 hour, they slide right into each other. This would be the 4 hour, this would be the 15 minute, they slide right into each other. This would be the 15 minute, this is the 1 minute, they slide into each other. From the 1 hour, let's say there, Yeah, the 5 minute will fold right into it. It's like a cog, and it's like a gear inside of a big machine or some shit like that, right? So now let's go to the daily, and this video is even longer than the last one. I love y'all too much. Excuse me. Um, I'm not really going to go all the way back and follow this, but you can see how all of the points that I drew literally match up with the structure. This one was off a little bit, but they literally match up primarily with the highs on the daily. It's literally the same stuff. I wonder when this is going to stop. It used to be 20 minutes. Now I see 40 minutes. I don't know if it goes to an hour, but shit, if it does, that's cool. But look, this candle closed below this bullish candle. That means this is a swing point once this bullish candle closes back above it. Did we ever close above this candle? Damn, we did. And so there's a lot of a lot more back and forth. The lower and lower and lower we go down on these time frames. But the last thing that I can see that I had drawn on this is that there was a high right here, and that high got broken. I'm jumping not all over, but I'm jumping from being precise on every single swing right now, just so you can see what I see. I'm gonna at least draw from here though. You have this high, low pushed up to this high, price pulled back, and it closed below this candle, making this a swing point. And then we never closed above this high. So the price had went like this, up to this high, pulled back, tried to push up, broke down bearish below this low, overall below this low, because that's the swing point low. And then we pushed up to this point, we pulled back, made a swing point, pushed up, breaking structure even, to come right back down here and break structure bearish again. This right here was the push down, pullback, continuation. We never closed below this point, but if your take profit is at this low, that little wick hits it and you get taken out of the trade as a win. Then we close above this high. That came from this low up to this high. We come down, we play around, the pullback was over, it came down and actually ended up breaking structure. From there, this high ends up getting broken, but before that happens, we create a swing point and the bullish momentum is back in the market. Then if we keep following, bullish closure, bullish closure, bullish closure, bullish closure. Nope. But wait, what did I what did I do? Bullish closure, bullish closure, bullish closure. No, but we got a bearish closure. What does that mean? This is a swing point. This is a swing point. This right here is a swing point. But this is a bearish move overall inside of this uh, daily bullish push up. That does not mean that I'm going to be selling heavily just because price moved in the opposite direction. But this literally is an entry for a short because overall price had pushed all the way up to here. This could have started the pullback. You know what I'm saying? Like when when the daily goes bearish inside of that monthly impulse, because this overall whole thing is one big monthly impulse. But inside of it, you can clearly see that there is a daily trend inside of this. Boom, 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 boom. Big daily pushes inside of this. So you can see the 1 month impulse is a daily trend. The daily impulse has an hourly trend in it. The hourly impulse has a 5-minute trend in it. And that's as low as I go. I enter on a 5-minute looking for a 1 hour. The 1 hour has an impulse. It comes down, creates a swing point. The 5-minute comes down. It will break structure on the 5-minute back in the bullish direction while inside of an already bullish 1 hour, right? And then as the 5-minute goes bullish inside of the already bullish 1 hour, now the 5-minute is bullish. And when the momentum switches back bullish, I get in for a buy and take it to the same high, which is the 1 hour high using the 5-minute. I'll show you that in a second. But look, so where am I at? Where am I at? This becomes, after we close above this high, this low becomes a swing point. Now, the problem with this swing point is that we can't really trust this one all the way just yet, because just because price closed back above this candle does not always mean that it's gonna just continue and break this high, because inside this box we're still overall looking for shorts. And if I follow the candles and just continue following them, and you know, There we go. Following them. And now at this low, this right here is an entry for a short. We'll get into supply and demand, but this is a supply zone. It's not that important for you right now, but this is a supply zone. And price hit it, came down for 1, 2, 3 days, closed below. It even closed below. And that would have been an entry for a short. But the thing is that it made a higher low. It made a higher low because this low is higher than this one. And then it broke the previous lower high. If the market is bearish, it should not come up, make a higher low, and then break. Because now this lower high, lower low, lower high, higher low, higher high. That's not what a bearish trend does. So it's highly likely that you need to be careful and that we could see price potentially start reversing. And this also created a swing point. So then when we close back above this bearish candle, that creates a swing low and a swing point, which, like I said, swing highs and swing lows are targets. In a bullish trend, a swing low is where your stop loss goes. A swing high is your next target. In a bearish trend, a swing high is where your stop loss goes. A swing low is your next target. So I'm going to pull this back over here. And we see from here, we have our bullish momentum, not bullish structure, just bullish momentum. And so we'll call that buys. And then all of a sudden, bearish momentum comes back in, sells. And then bullish momentum. You're like, hold up, bro. You said you was ready to sell. What you doing? So you're going to say that's buys. And then we got bearish momentum, which is what we're looking for inside of the bearish structure that we're in. We're in a bearish structure on the daily. So like I said, this sell that some people probably got in was not wrong. The only thing about it is what I do now is when price starts to create these structures inside of the bigger structure. The bigger structure is from this high down to this low. And then it started to build this bullish structure inside of it. I would have wanted to see this low get taken out first, or for price to push up and then come down and take out this low. Because the same way it came up here and made a lower high and then took that out, if it made a higher low and then a lower high, lower low, it's matching back up with this structure that we had with the bearish structure. Let's put it that way and leave it there. All right. And so from this point, we just follow the bullish closures or the closures above or below. We'll just see if it's above or below. And this bearish candle closed above this bullish one. This bullish candle got closed above, closure above, and just keep on following them until it fails. It couldn't close above anymore, but we got a big closure below. And what did that create? A swing point. And we broke the previous swing point that was supposed to be having our stop loss on it. We broke that point, which means now we also have a break of structure on this right here, this line right here. I'm gonna make it big as hell. That's our break of structure right there. So now, where did our impulse start? It started here, it finished up here. This is where now we are in a bullish market again. And we now see that our pullback has started. Our pullback has clearly started. And it came all the way down here. So we're going to say this is sells. I hope I'm done in the next 12 minutes because I don't want this to be an hour-long video. I know y'all fuck with me, but I don't know if y'all fuck with me that much. It's a closure below right there. They call this daily. We close below this candle. Did we close below this candle? Nope. Did we close above that candle? Yep. We closed above this candle with this one. And now we're working on closing above this candle with this one. This is the daily chart and it successfully closed above this candle. So this right here was okay for a buy with a stop loss either here or here. I like this one right now because it already chopped around for a long time and then pushed up, tried to come down and pushed up again, or started pushing up again. So it gave you the same entry on two different candles. This one's a little bit lower, but you get the point. And now the problem with this trade is that the target is here at this previous swing high, but that is not going to do shit for us. I normally take a 1 to 3, and this is how. Now I'm gonna delete as much as I can. And I'm gonna show you how this is the same drawing. I'm gonna change this one to blue. What the hell is that? Daily shift. Nope, it's daily intermediary. Bro, daily shift, and I'm just gonna change. Oh, I keep on putting the wrong one. Just change it to that. So we got this blue line up here at the high. We'll get rid of all of this back and forth. I really hope this helps, bro. What we have, this is the main high, and this one is the high that if price can come back to it, it's probably going to respect, because this is where the demand zone is. And I really don't like this demand zone. I'll explain why in another video. Just keep in mind the word mitigation. But after we made this one, there's this one. The only one that has not been touched that's down here is this right here, which is the reason why I had these two little things right here. This right here is the low and the high. This is the low. This is the high, because we're looking at where the swing points were created at. What else is missing? What else is missing? Is that even the daily? That's most definitely the daily. Oh, I know what's missing. We had this break of structure low right there, which is this little low right here. This high. Ah, I see. This high right here is the overall push down. And this is a equal high right here. But I'm not even gonna do that. It's damn near the same thing. And so if we blow these up side by side, it's basically the same shit. We got this blue line is that blue line. That's down to this low. I think maybe I was on the weekly too. Yup. So this is how I really did it. I did use the weekly for this as well. You don't have to, but that's what I did. So that was those, and then go down to the daily, and this is where, yep, this is where all my markups had come from. So the blue lines were following the weekly, and then the little light ones are following the daily. And I'm not gonna go lower, but I did like an hour and 50 something minutes, bro. No, 30 minutes at first and 50 minutes now is 80 minutes. That's an hour and 20 minutes. I really hope, like I said, that this is helpful to somebody. But before we keep going, before we go anymore, let's go down to the daily. The 1 hour. I don't know why I just said daily. And now we will just follow the overall structure on the 1 hour, because there's way too much switching back and forth. This high never got closed above, ever. And then it made this high before the pullback. So the candle, the area that made the low is this right here. And that became a 1 hour break of structure down, making this a swing point on the 1 hour. The market is overall bullish. We know that. And then did we ever? Nope. Price pushed all the way down to here. Gave us a new push. Broke structure bullish right here and right here. Why? Because it made a higher low. And then from here, and this candle made the higher high. So that don't even matter. So there we got our break of structure right there. This continued all the way up to here, and then it pulled back, never got above this point until right there. And it never came below these areas right there, right? So price is clearly bullish from this low, and then it pulled back this low. We closed below this candle, so now it's this low. But this one is the one that broke structure. So we can delete this, delete this. This is just what I do though, right? So now it's a break of structure. Price broke down bearish, and now we're following bearish. We pulled back right there, pushed down, made this low because we closed above this high, making this a new push down, bearish, bearish, and now you can see how you would have been able to trade all of this. Um, Price pulled back, went bearish. Ooh, it never closed below there. Never closed below there. This was the high, so this is where price went bullish. We don't really care about this. And this is where, like I said, sometimes this right here, people will start getting in buys because this inside high was broken, and then they see something like this and they just start getting involved. I really don't like getting involved like that once we get past like higher time frames, like the daily, because shit like this happens. It looks like it wants to go up and then it just collapses and takes you out. Um, and then comes all the way up here. Did it ever close below? This candle right here does have a closure below, and I don't. It's kind of getting like I call it granular. And the reason why I say that is because if you start looking so tight, you ain't gonna be able to see shit. If you do this, you can see. Once you start going like this, you blocking your vision. You're squeezing it too tight. So you don't have to be as accurate on every single swing. But I'm just doing this to show you how you can follow the market with like crazy precision. And I'm gonna shut the hell up now and just do this real quick because I feel like I've been talking too much. We break above, pull back because we close below this candle with this black one. We shift back up. That's a break of structure. New high is actually the high of this bearish candle. We pulled down to this low. We created this high. We never broke until right there. That came from this low that we clearly just broke. And then we pushed up and we came down and we took out this low. And this is where one way you could have gotten in is we finally made it outside of this candle. Prices pulled back, pulled back. This bearish candle closed below this bullish candle. Inside of this bearish candle, that's a good entry. This bearish candle closed below this bullish candle. Inside of this bearish candle, that's a good entry short. After, if you wanted to do that, but price ends up taking out. Did we ever take out this low? Nope, we never took out this low. But did we ever take out the low or the high? Ah, got you, got you. We never closed below this candle, but we did close below this low with this candle, meaning this entire thing is the push down in the breaker structure. But then we did close above this candle, signifying this is a valid pullback. So we can delete that. We got our valid pullback, making this a swing low. And then once we close below this candle, that is our swing high. And what do? We take an entry on the candle that closed below right there. Stop loss either above this high. I'm not going to put my stop loss way out here. I don't give a fuck what nobody talking about. So I'll put my stop loss above here with some breathing room or however you want to do it with an entry with a TP at this low. The candle that you enter on, if you want it to be even tighter, you can put it right there, but that's like starting to get a little advanced. Excuse me. And then the high is up here. We close it. This is the low. We keep pushing, pushing, pushing. It sound like a push, push. Who the song is like, go get the money. OT Genesis, go get the money, go get the money. And so today, what we have is this 1 hour closure above. We're in this range, and right now the pullback has started, and I want to see price continue down, and then give me a bullish candle closure upward, and I'm gonna enter a buy up to here. You know what I'm saying? So that is how I use all of the time frames inside of each other. And if I can get a good buy from right here, if I can get either a bullish candle to close that closes above another bullish candle or whatever, my target is not only gonna be, so stop loss right here, target right here, but my target is really out here at what? The daily high, because I'm still trading in this direction, because this is telling me based off what I see that the market should go up to this high. I'm looking for buys inside of this range, which is the reason why, like I said, you can stay away from the sells if you want to and only focus on the buys. But the buys is what's making money in this range. The buys are what's gonna hold you off longer inside this range right here. So It is an hour long, 17-second countdown. If y'all need anything else, let me know. But I'll fuck with you.